Really interesting session now. Market snapshot, investing in the Netherlands. Super panel for you. We've got Rogier, who's a real estate and finance Benelux at Berlin Hip. We've got Jaap van der Bijl, who's CEO at Altera Vastgoed. Nadine Gelke, who's head of acquisitions for Nordics in the Netherlands at LaSalle Investment Management, and Jeroen Gerritsen, who's managing director for Panattoni Netherlands. So a really interesting, diverse mixture here to be able to give you a really good and interesting outlook on the current market. Let's just start with brief introductions. Let's start with you, Rogier, if we can. Just a brief introduction of yourself and the business.
Yes, sure. Good morning, everyone. Thank you, Richard. My name is Rogier. Since 12 years, I've been working for Berlin Hub, a commercial real estate lender, being active in real estate financing since more than 150 years. In the meanwhile, we've built up a loan book of more or less 2.5 billion here in the Netherlands, and which makes us probably the largest non-Dutch lender in the Netherlands. Very proud to be able to tell you that. We've got a small team on the ground here, 5 people, a commercial team, including a valuer. And in the last years, we have developed ourselves to, let's say, a relatively conservative Pfandbriefbank into a very modern and green lender, having issued approximately 5 billion in green bonds outstanding at the moment. At the moment, even though the circumstances are changing, very eager to keep on the good work.
Great, thanks very much. It's been interesting that sort of ESG side has been a real topic during the whole conference so far, particularly yesterday and also today. And we'll come back to that later, Rogier. Thank you. Yeah.
Yep. Good morning to you all. Jaap van der Bijl. I'm the CEO of Altera Vastgoed since 4 years. We're getting at Altera Vastgoed close to 3 billion assets under management, particularly on residential and also on retail, but focused on food and convenience. One of the cornerstones of Altera Vastgoed is ESG and sustainability. So both our funds are first ranking in the Netherlands within the GRESB benchmark, and the residential fund is even 3rd worldwide. So happy to be here and to talk about some market development.
Super, thanks very much. Nadine.
So good morning to everybody. My name is Nadine Gelke. I'm responsible in LaSalle for the acquisition in the Netherlands as well in the Nordics. We are active in the Netherlands since now roughly 6 years again. And in the last 6 years, we managed to build up a portfolio of nearly 1 billion, which is mainly offices, residential, logistics, and actually one retail property. So very proud of having created this rather resilient portfolio, and looking forward to a very interesting discussion today.
Super, thanks very much. Jeroen.
Hi, good morning. So my name is Jeroen Gerritsen. I've been asked to head up and start up the Panattoni activities in the Netherlands. We started last year, December. So just a couple of months now on track. And yeah, we've been quite successful already in acquiring two locations for development of logistics properties. And yeah, we've got another 3 lined up, hopefully to be able to announce those soon. So last couple of months, we've been focusing mainly on acquiring these positions. And from that, we try now to further grow our business, also attracting more build-to-suit logistics developments across the nation.
Great, thanks very much, Jeroen. I just wanted to pick up on, at our last event that we did, we've obviously been doing regular investment briefings around many markets, but also including the Dutch market. And we were very much focused on the growth of the economy there. Jaap, I'm just wondering, from your perspective, how do you see the current outlook for the Netherlands in terms of the economy? What's your sense of that? How do you see that in, I suppose, also in comparison to the other European neighbours?
Yeah, okay. Well, of course, we've had the COVID crisis, and I like to, divide the recession and recovery phase we're getting into. We expect that there will be some recession still going on next year, while at the same time, some branches of industry will start to recover again. In relative perspective, the Netherlands are okay if you compare them to some of the European countries. No doubt some of the industries will be hit. Think about, for instance, the KLM or the industrial plants we have. But overall, I think we're quite capable with the financial stimulus in place by the government to get back to this, moderate growth of the GDP. That would be very helpful. It will take 2 years to get there.
That's interesting. I mean, just in terms of the financing side, Rogier, obviously that can sometimes be based around what's happening in the broader economy and what's happening both in terms of the real estate side as well. So I suppose, what's the position at the moment? How do you see, I guess, both the position in terms of the economy, but also in terms of the sectors, and I suppose your appetite to lend into those sectors?
Well, our appetite basically more or less remains what it was. First of all, the bank is confident about but also about the Netherlands. The Netherlands is a very social country. We have a very strong social welfare system, which means that, of course, we will be hit by this pandemic like all other countries. But as you can see in the economic outlook, we will probably be a bit more stable than many other European countries, which has, of course, a positive impact on consumer confidence and unemployment, for example. When we are talking about our bank, we keep on lending on what we have been doing already before March. We had a strong focus on convenient shopping and, of course, residential. Coming from a portfolio which is actually dominated by residential and offices, which doesn't mean that we don't want offices anymore. It's still a very interesting asset class. I'm sure we will come back on that. But in fact, we are this year working a lot on these two asset classes, which is almost a fortunate coincidence, but it seems to work these days. Mm. It's not that we are going to change that position. We have been prudent through the cycles, and we remain prudent.
And just coming to you, Nadine, I suppose when you're looking at the market, how have you seen that developing? I suppose what's your view of it over the last 6 to 12 months? I mean, Jaap mentioned there obviously the sort of split between the COVID element and what's happening now. I suppose, how do you characterize the market at the moment? And you mentioned the sort of sectors that you're looking at, but how are you seeing those in terms of opportunities? Is there capital available? Is there product available? What's your sense of the overall market?
I mean, in general, it was very interesting last 6 months. We've never seen something like that, and everybody had to deal with challenges we never had before. So ourselves, as well as most of our competitors, at the beginning, second quarter, we put everything on hold, and we kind of spent a lot of time on researching, making up our mind, how we assessing risk, etc. And now it feels like everybody's waking up at the same time, more or less, since maybe the recession is not as bad as many of us would have expected it. Hence, I think the market is not necessarily lacking capital. What I do see also in the process we are now joining is there's a lot of competition, there's a lot of capital in the market. Suddenly it feels like everybody's waking up and then finding out there's only 3 or 4 months to go until the year end and still quite some capital to be placed in the markets. And then, having done all those research, it appears that most of us came to the same conclusion. Now we are allocating money from other countries to countries like the Netherlands, Germany, or France, and to the same asset classes. So for logistics, residential, I think there's a lot of pressure in the market, a lot of money to be spent. Common lack of product we are meanwhile kind of used to. And I mean, the Dutch tax regime doesn't really help the pressure in the market. So giving the announcement of this week, I think until the year end, there will be lots of desperate money, how we call it in the market.
Interesting.
Desperate money.
And definitely, I mean, I was just thinking as you were saying that, goodness, for me, the year has gone so quickly already, and now you're already taking me to the end of the year, Nadine.
Sorry for that. I'm afraid it's a matter of fact.
It's true, I know, yeah. Jeroen, let's pick up with you. I mean, Panattoni, obviously, major investor developer in the logistics side. What's happening in terms of the market there? What are the key drivers, I suppose, particularly for that sector? I mean, the Netherlands are always very popular in terms of the ports for logistics, but what are the key drivers for your business there, and what's the strategy?
Yeah, so indeed, as other speakers have also mentioned, everybody's definitely waking up again. I think from the user perspective, our users, our clients, most of them have been able to carry on. I mean, the lockdown here in the Netherlands wasn't as hard as some other countries, so our government called it an intelligent lockdown. So construction companies have been able to keep their sites open. Most manufacturing plants have stayed open. They maybe had to work in shifts, but so there's been much more continuity than people would expect under the circumstances. And obviously people held their breath for a bit in April, so demand was a bit slower. But now since September, everybody's back from summer holidays, and yeah, it's if I see the amount of demand that's now coming our way. So the typical 3PLs are back in business. There are tenders being held by producers, and at the same time, yeah, e-commerce is bigger than ever. I think one thing that definitely came from COVID is that many people that weren't used to shopping online yet now have found their way. And yeah, if you talk to DHL, DPD, PostNL, they are working at Christmas shifts, and they are now fearing actually the real Christmas or Black Friday for that matter, because their capacity is at maximum for months now. So yeah, for us as a developer and trying to, of course, help them in these kinds of queries, this is opening up new opportunities.
No, thanks, Jeroen. I mean, it's interesting looking at those sectors, and I'll come back to that because it's one of the major kind of trends that there's been. I think that focus on also residential, I think, and anything around that kind of anything with a roof, in essence. I just wanted to pick up with you, Rogier. I mean, one of the big trends. And you mentioned it at the beginning, as did Jaap actually in his introduction, is that focus on ESG, sustainability, then moving also into wellness, but particularly the kind of climate agenda. So just update us a little bit. I mean, the Dutch market has always been a kind of leader, I think, in this area to a certain degree. But in terms of the bank lending side, what's happening there?
Well, to start with, what we've seen in the last crisis, the global financial crisis, is that basically the attention for ESG kind of slipped away. And it looks like this time it is remaining on the table, which is very positive news. And in the meanwhile, the ESG agenda is no longer an advantage, but more a condition. It's basically fully established in the Dutch economy, even though I still think that it can get some more attention. It's also very much linked to people's working places. People want to have healthy working places. And of course, we've now in the past 6 months learned more about flexibility of where we work and how we work and which devices we are using for that. I think the meeting today is a good example for that. But we, of course, need healthy buildings. We have come up with a relatively fresh ESG agenda for the coming 4 or 5 years. I just mentioned the green bonds that we've been issuing, but of course, in order to keep on adding value there, we must have our green portfolio growing. And in order to do so, we first of all said, okay, it has to grow from the current 20% to 1/3 in 2025. Secondly, we want to have better insight and transparency in what we are financing. It is challenging to align the green labels and the labels that we need in order to issue our green bonds. And thirdly, we like to support our clients more with transforming their, let's say, brown buildings into green buildings. That is, I believe, at least in the Netherlands, becoming the standard. And as you may know, it is mandatory for office landlords to let green buildings from 2023. So that it also adds to the fact that it is actually a condition and not which is something nice to have.
Oh, good. I wanted to say as well that if you wanted to ask questions, please do. If you're watching this in the auditorium, just simply go to the web app or the mobile app, and then you can ask questions there, and I'll make sure that we answer those for you. I just wanted to bring this around a little bit to you, Jaap, as well. Obviously, a lot of focus on impact investment, and in fact, there's a session coming up on that. And as well, senior living, those kinds of things, particularly in the Dutch market. Is that an opportunity at the moment? I know it's something that Altera has been doing a lot of work on.
That's right. We do see it's an opportunity. Of course, there's a demographic trend going on. Let's say the baby boom generation coming into retirement age. Most of them occupy still a residential dwelling, which might not be the most suitable for the life stages that they will face in the upcoming decades. We like to focus within our residential fund on this life cycle type of investments, especially for seniors, but also for the younger generation, as both have difficulty getting their good, residential dwelling. It also ties in with the cost of healthcare. So if we're able to facilitate seniors moving into life cycle adjusted residential with healthcare facilities organized and managed nearby, it will also have a dampening effect on the cost of healthcare insurance in the end. We like that. And in from another perspective, as most of our clients are pension funds, they give pension benefits to retired people. There is a circular motion in this type of investment. So we like affordable rent for senior people, well organized, good quality, and healthcare services organized nearby. That seems to be a perfect fit. And given the huge demographic push, also a substantial type of market which we can operate in years to come.
Okay, good. Nadine, let's drill down a little bit in terms of some of the other sectors. You obviously mentioned their residential, office. How are you seeing those? There's obviously a lot of discussion around the future of office. A lot of discussion as well about winning cities, how cities will change. And actually, it was mentioned yesterday in the session that we had around there that the Dutch market was actually quite good in a sense in looking at that cities, because the cities were slightly more spread out, but still very well connected. What's your sense of, I suppose, the sectors that you're working in particularly? Do you see these major changes, and what kind of opportunities are you looking for in, particularly also in the residential and office market?
Okay.
Clearly, we have a lot of discussion on how does the future office look like? We do believe in the future of offices, only we think offices will be different in the future, because after Corona, I think everybody's appreciating coming back to the office, having interaction with people, feeling the dynamics, having the opportunity to communicate. As at the same time, I think we appreciate being home and just, doing some kind of work at home where nobody is disturbing us. So we think the future office will be more ground for communication instead of people sitting alone in their offices and, I don't know, reading SPAs or whatsoever. So our current forecast is, in general, the next 1 or 2 years will be a bit challenging. Our, let's say, rental growth assumption for most of the sectors are not as they have been before. I think we need to change how, as I said, offices will look in the future, like in the future. But nevertheless, we do believe in it. Same for residential. Obviously, everybody is aware of the lack of apartments in the Netherlands. So our focus will be on cities with positive demographics, which doesn't necessarily mean that it's only Randstad. It can be outside the Randstad area, but it needs to be, let's say, a positive future. Shrinking cities is something we're going to avoid. Personally, I'm a big fan of Eindhoven.
Mm-hmm.
So, done 2 office transactions, 3 years ago, and back then I spent quite some time in Eindhoven and on the data of Eindhoven. So this is for sure one of the winners. And other than that, needless to say that we are focusing on logistics also like everybody else. And currently we're trying to stay away from residential.
Okay,
Retail.
right.
Sorry, retail. Sorry,
Yeah.
residential retail.
Yeah.
Yeah, go ahead. Yeah.
Okay, because retail is an interesting thing. I understand, the general opinion, stay away from retail. The funny thing is, well, you can call it funny or not, that during the COVID crisis, with the social distancing and all these restrictions, as we focus on food and convenience, we've had a very good 6 months. Because those shops were open, supermarkets were open. So we're talking about grocery-anchored supermarket centers. And even today, we're quite pleased on the cash flow we've been able to collect from the tenants. So make the distinction between, let's say, convenience, when you go for your food and your personal care items, and comparison, where you go for your fashion. That's another ball game. That's difficult.
I
food and
completely
convenience,
agree.
that's great. Yeah.
I couldn't agree more. Groceries, DIY stores are for sure the winners out of this crisis. The only issue for us as LaSalle is there are not that many grocery-anchored opportunities in the market which are actually big enough for us to really
Let's call. Let's have a call after this meeting.
I give you a call immediately afterwards.
Okay, very good.
It's obvious. It's obvious why, Nadine. It's because Jaap has bought them all.
Yeah, I got some more. But Nadine, you made a very interesting statement regarding offices. I do expect, for instance, that if you reflect on where people work, that will also, tends to come down on residential areas. Because people have gotten used to using online, working at home. So the commuter zone, people are taking it more or less for granted that they live further away from their office, that they can allow them to do so, because they only will travel to the office maybe on a 2-day per week, 3-day per week flexible type of thing. And that's also relevant for the development of the residential market.
I mean, that's interesting. Jeroen, just picking that up from a logistics point of view, does that mean in terms of the strategy that you're going to have obviously the larger centres, but then you're maybe going to have to be doing delivery, same day delivery, the expectations of that much further afield into some of the smaller cities, slightly further away from the main conurbations. What's your view on that? Do you see, because we've had such a big growth in e-commerce generally, is that then going to mean that the types of real estate you're going to be looking for are going to change?
Well, not as a change in the sense of really doing something different, but city logistics was already a trend before COVID. Yeah, and now it's just enhanced much quicker than before. If you look at Albert Heijn, if you look at Jumbo, they're all looking now for last mile locations, and they're all setting up their networks and they're enhancing that every day. Finding these locations is key. And that's something we've already been focusing on. One of our acquisitions near Rotterdam is focusing on that as well. A 20-minute drive to the heart of the city center of Rotterdam. And there we really focus on these kinds of companies that are looking to set up a network close to the cities, close to consumers. And it's a trend that's just will keep on growing and growing for the coming years.
And in general, Jeroen, does that mean, obviously, if you're building more in an urban space, does that mean you're repurposing an existing building, a new building? Is it then involved in mixed use? Because those are obviously other big trends that are coming through.
One thing we really like to set ourselves in the market for is doing brownfield. So the property we bought in near Rotterdam is indeed a brownfield. It's existing facility with office space, with old industrial on it. It needs remediation, and that's where we would like to stand out to acquire these locations to really do all the work. To be able to accommodate the demand that is there.
Interesting. And this is just for anybody, really. In terms of that sort of, you mentioned it already there, Jaap, in terms of that sort of mixed use where you've got office, you've got logistics, you've got retail, you've got residential, you've maybe got student and senior. Is that the way that you see everything moving? I mean, is that an accelerator fact from COVID?
To an extent, it is. Yes, it is. Of course, the theme was already there, mixed use, and that has everything to do. What's a vibrant fabric of a city, of a high density urban environment? So we kind of like, for instance, on the convenience centers we have, is to mix in with other types of tenants. Think about the healthcare. It could be education-wise. So this serves as a community center in the more suburban metropolitan areas within the city, except the high density environments. We're looking for, let's have some, it might be even retail, or it might be office type of working on the ground floor and the first floors up, and then slowly move into residential and make sure that it fits in with also the requirements of the municipality, because they have very specific requirements.
Okay, good. And Rogier, just to pick up with you, I mean, previously, when it was a financial crisis, obviously the banks had significant issues. This is a very different crisis. So are the banks in general, I mean, it doesn't necessarily need to be your bank specifically, but feel free. But are the banks in a significantly better position now? And what are they looking at? I mean, is there a tendency to lend just to partners that are already there? Is there new lending going on, or is that going to be more for the alternative lending? What's your sense of the financing market in the Netherlands more broadly?
Well, we note that there are lenders that who are focusing on their own clients at the moment already, which shows that they might become a bit less aggressive than they have been. We are basically open for both new and existing clients. It definitely depends on the proposal that they do and they make. What we also, of course, have seen is that there's more diversification of funding, and that trend will probably proceed. That's one thing. Of course, in the beginning of this crisis, we saw liquidity spreads coming up a little bit. They came down relatively rapidly, which shows some confidence in the banking sector. And I also believe that banks in general are a bit more resilient than they were 12 years ago. So there certainly is availability of funding. Not only, by the way, for debt, but there's of course still a lot of equity available. I'm with Nadine that we will see a lot of pressure towards the end of the year, not only because the real estate transfer tax measures, but also because of the discretionary capital that is still available. May become quite hot.
Okay, interesting. We've got around sort of 6 or 7 minutes left, so I just want to drill down on a couple of the areas, like what we're expecting for rents, yields, those kinds of things in terms of the market. So feel free to pick that up for your sector. Let's start with you, Jeroen. What are you expecting to see in terms of rents, yields, deals? How active is the market, and what's happening?
On the investment side, we definitely see, I can confirm that there's definitely a lot of appetite. And I do know that there are some finished new build developments on the market now going for that year-end rally. And yield compression, well, I expected very much. I mean, it was a bit flat, obviously, in the last couple of months, which is normal. I mean, everybody was looking like, okay, what's going to happen? But with this year-end push, we will see some new records being made on low yields for logistics. And on the demand side, as I already mentioned, there it's coming back strong. I don't expect this year too much ERV growth because I mean we already did a lot the last couple of years, so that will remain stable for the next maybe 6 months. But then, once we get out of this, the recession that came after COVID, I mean the scarcity of land, the scarcity of available high quality product, it will further push rents up. It's inevitable. And also, what we talked about, as we go more to urban locations, we have to pay higher values for the land. And then, in the end, that has to be to find its way in rent as well.
Okay, good. Nadine, what are you expecting?
I think it's a very complex question, since actually this is different. I think for different risk classes and asset classes. I think in general, from a leasing market, given still the uncertainty in the market, we expect that actually the leasing market will be and will remain slow for a while, because quite some, what we see in our own portfolio is that quite some tenants just postponing their decision and just see, okay, how actually we will be coming out of this crisis. So we expect it to be, in any case, slower as it was before. To what extent, we have to see, we have to feel. On the yield side, yield compression, logistics can confirm that. Same for residential. For offices, I think it's very dependent on what it is. Because what we see in general is that investors trying to hide leasing risks for the next 1 or 2 years, since it's a bit unpredictable, as I just said, what is happening on the leasing market. But for long-term leased offices, huge appetite, and I think, yields will, for this kind of product, at least will remain stable. Okay, good. Yeah. What's your sense? And also, I mean, obviously, once we go past the I suppose the health-related crisis, there's also then potentially a large global recession coming. So I guess, how are you seeing that? And also, is that a concern for you? Or do you think that actually the investments that you've got are more resilient? What's your view?
Okay. First of all, it's an interesting dynamics are in play. And I do agree also with the others that we'll see quite a busy run to the end of the year, and even maybe beyond that. If I just focus on residential, given this scarcity and the mismatch between supply and demand, stable, still some possibilities for rental increase. We're getting near the yield compression, being stable, but a very interesting and very resilient type of investment for those investors who are looking for a core type of exposure. On retail, I think we'll see that the yields of comparison retail, so the non-food and fashion, will go up significantly. And it's also a very interesting market. There might be some fire sales going on, especially if you look at the listed side, the retail funds on that side. They are not in an easy position, so to say. On the convenience side where we are, well, it has proven itself during this COVID-19 crisis. Very stable, with a good yield over bonds. We'll stay there on this 6. There might be some yield compression because finally, we've been doing this strategy for quite some years now. Finally, also there's recognition in the marketplace. This is very, very interesting. Offices, I agree, depends on location. Logistics, already elaborated by the fellow speakers on this panel. Healthcare, very interesting, as it's run by a need-driven trend. I can go on, Richard, but I know we're running out of time.
We are. We've got 2 minutes left, which means that out of those 2 minutes, then you've each got 30 seconds. You've used some of those already.
Okay.
We've each got 30 seconds, just to give a kind of view for anybody who's looking at the market and looking at opportunities, where you think the sort of opportunities are. Let's start with you, Rogier. You can view that as where you think it would be most interesting to lend, or where you think the opportunities are. Up to you. But 30 seconds on where you see the most interesting opportunity at the moment.
That's not an easy question, by the way, in a market which is challenging by itself, because the most favorite asset class, resi, is of course relatively scarce. So we will be focusing on that. If there's, it's a challenge financing the good and relatively new portfolios and new products. We still are interested in that. When it's about offices, there are not many reasons for yields and offices to come down. So also their quality will win. I'm dying to see how this future will look like. When it comes to convenience, I'm totally with Jaap. If there are not too many transactions in there. There's finally recognition. Yields are coming down at the moment. Transactions are relatively small. So if there are portfolios, we are definitely interested to finance that. Jaap and Nadine, if you find each other on this transaction, then please give me a call.
Oh yeah.
Richard don't have
Sure.
But I think in general, the recession coming up in the coming 6 months may give some acquisition opportunities, and some of us will step in there.
Okay, great. Thank you. Jeroen, 30 seconds. I suspect it's going to be logistics, but tell us what and where.
Yeah, well, so we will keep focusing on unlocking these opportunities. I mean, finding the land, finding the positions, that's key for us. That's what we've been doing the last couple of months, and that's what we'll keep focusing on. And at the same time, we'll follow our clients as we see that they are expanding their networks, and also to locations maybe that before were a bit slower. But retail is changing, and that's unlocking new opportunities.
Perfect. Nadine?
Nothing really to add. If one could bring me a inner city property, retail on the ground floor, modern office building on, let's say, the next 3 floors, and then on top some residential, would be mine.
Okay, perfect.
And logistics in the basement, huh? Last mile in the basement.
Excellent. Okay, last. You can only have 20 seconds. Yeah.
Okay, very good. Thank you. Oh, wow. I almost caught by surprise. I already spent my time. Go for ESG, future-proof type of investments. It's very clear. You have to listen also to other stakeholders in society. So go for it, whether it be residential, logistics, retail, convenience retail, what you may have, but be sure that this portfolio or the assets are future-proof, because you will avoid unnecessary capex in the future if regulation comes down on you. So prepare and anticipate. That's the best thing. We've got that, and we are very keen on proceeding to be class leading in ESG.
Very good. The focus of this event in general was kind of getting back to business, but also creating connections and hopefully driving new business. And we're presumably doing that across the exhibition while this is happening. But I'm delighted to see that we may also be doing it within this panel, which is great.
Lovely, very good.
Well done.
Thanks very much for joining us, Jaap, Rogier, Jeroen, and Nadine. Really interesting discussion.